So do you guys talk to real estate agents? What are the real estate agents saying that you talk to?
I think they're saying that it's much harder to put a transaction together at the moment. I think vendors, if they don't have to sell, are sort of a little bit reluctant to meet the market, and but the buyers, because they have more choice, are a bit slower as you think to sort of go, well, okay,
I'm not in a rush.
I'm not in a rush. I'll wait for something else. So. Yeah, from what I'm hearing, there's maybe one or two good buyers on each property. Although, I think there was 50 people at an auction I saw at the weekend or a couple of weekends ago around Clovelly. So I think
that's a bit special though.
Yeah,
Chloe is special. Those sorts of environments. There's only so many houses, and they're pretty special environments.
Yeah,
they're outliers. I would have thought
they are, and I think if they're priced, they guide them pretty low to get a lot of inquiry, and it ended up going pretty high over the guide. But generally, I think there's not, the same buyer pool proportionally to the amount of properties as there was, and things are probably taking a little bit longer to sell.
What's your view that you're telling your clients? We have to wrap, but what's your view you're telling clients or your businesses, Azura Financial, what are you telling your clients relative to where you think rates are going to head next year in 2025?
Well, yeah, it's an interesting one because I think there's so many factors at play at the moment. And I think the markets are currently expecting, cut middle of the year. And I think the major banks have basically pushed back their expectations to between Feb and May now. But is there any major reason to cut interest rates, Mark? And we all sort of sit here and say, oh, it'd be great to cut rates. But I think as a borrower and a buyer, I sort of think to myself, well, okay, if they did cut rates, what's that going to do? I'm going to be able to borrow a bit more, but the market's going to run away from me as well.
Yeah, which is what happens here.
Yeah, I don't know if everyone should. I don't know unless you're in like financial hardship and you need rates to be coming down and you want to get relief, which I'm sure a lot of people do, of course. But as a buyer, wanting rates to come down so I can borrow more to buy, I think you just, there's two sides to that story.
Well, the price just restructures.
Exactly.
It just resets.
Yeah.
And you end up paying the same amount per month because instead of your interest rate's lower, but you borrow more.
Yeah.
Which basically means you're paying the same amount per month. Generally speaking, there's not much in it.
No.
There's a bit of an opportunity that prices don't go up. If you're really clever and you get there whilst there's a bit of supply in the market, like around Christmas time this year, for example, and you find the house that you actually want to buy, but it hasn't sold. And if you somehow manage to exchange and say, look, I'll do a settlement in 4 months' time, and miraculously the Reserve Bank drops the rates in March or something before you settle, then you've probably done well. That's a proper arbitrage, and you're coming out of a stockbroking environment, you know what that means. But that's a rare thing.
Yeah.
So it's really hard arbitrage asset markets like mortgage or lending, property markets. It's one of the hardest things in the world to do. So what would you say to somebody? Last question, but what would you say to somebody, you're experienced in this environment, who's waiting to time the market? What would you say?
I think that's one of the just timing the market in property is very hard. I think property is a long-term investment, and you would have expected the market to come off when they've increased rates from 0.1% up to 4.35 over 2 years, but it came off briefly, and then we've had 21 months of basically increases. So I think timing the market is a really dangerous thing to do because psychologically it's hard to do. And when do you buy? Are you waiting for it to go down? Are you waiting for it to turn? I think you really need to take a long-term view and buy when you're ready, but also understand the dynamics of play here. We've had borrowing capacities come off 30%. We've had interest rates basically go through the roof in a very short period, and the market has been really resilient. And you've got to understand as well that it's not about whether you think the market should go down or not, but the policymakers are incentivized to not let the market go down. So even in the wake of borrowing capacities and rates going up and an inflation crisis, we've also had massive increase in net migration numbers into the country, and that's sort of, I think, propped up the property market to some degree. So you really just don't know how things are going to play out. You might think the market's going to go down and it ends up going the other way, or you might think it's going to go up and it ends up going the other way. But one thing that people can be sure of, and I think maybe you can either agree or disagree with me here, if you take a 10 or 20 year view, and probably a 20-year view is safer, you're probably going to be extremely confident, unless you've bought really the wrong asset, that you're going to be well ahead over the long term, but who knows what happens in between. So you sort of got to cut the noise out. And as long as you can borrow responsibly and take a long-term view and understand the product that you're buying and the areas and the demographics and do your research properly, I think timing the market is lower down the priority than time actually in the market.
I think that's it. I think that's a good summation of, and in other words, buy when you can afford it. Buy when you can afford to make the repayments on the loan that's been pre-approved or approved to you, and buy when you find the property suits you. End of story.
Yeah.
Don't overthink it.
It's harder to find the one that actually suits you than it is to figure out what the timing is. I think,
and try and beat the market, because you'll beat the market over time, but you won't beat the market day one.
Yeah,
that's pretty hard to do.
One little story, Mark, is that I heard a few people just selling when these rates were going up, thinking, I'll buy back in when it's lower. And unfortunately, it went against them. And I mean, who would have thought the market was going to go up in the wake of all these interest rate increases? And that's what can happen. But the psychological, actual, the how detrimental that can be on someone psychologically.
As long as you rebuy when you sell, you're okay. But if you sell and don't rebuy and just stash the money in the bank, then you right now in Australia, particularly here in Sydney, you've lost out.
Yeah, you're battling.
Tom Hawley, I nearly called Jangus. Tom Hawley, that's your uncle, your late uncle. Yep. Tom Hawley from Missouri Financial. Great to see you, mate.
Good on you. Cheers, Mark. Thanks, mate.